Today, my guest is Leslie Smith. She is the managing director for Commercial Direct, a national small balance commercial real estate lender. And in just a minute, we're going to speak with Leslie about commercial lending for commercial real estate. But first, a quick reminder, if you like the show, CREPN Radio, please let us know. You can like, you can share, you can subscribe, and as always, you can leave a comment. We love to hear from our listeners. And normally, also want to just let you know that we do have a YouTube channel. If you'd like to see how attractive our guests are, you can check that out. It's a Commercial Real Estate Pro Network. Today, we don't have the video option, but just so you know, that is available. With that, I want to welcome my guest, Leslie. Welcome to CREPN Radio.
Hi, thank you for having me.
Well, I'm so glad you could join us today. Before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Sure. Hi, everybody. My name is Leslie Smith. And my background really started in banking, like many people, but I started in the call center area. So I ran a call center for many years, and then moved over to lending for a private company. And the reason I found that interesting is because if anybody's worked for a bank, there are a lot of restrictions. Innovation is tough. And in product development and managing a team and making decisions. And so moving outside of the banking space, but still in lending, was really exciting and fun. And that's where I've been since then.
Got it. And you mentioned you were in a call center. Was that for commercial or was that for residential or?
It was mostly residential and mostly credit card. So highly regulated.
Got it. Got it. Well, for our conversation today, I'm wondering if maybe a good starting point is just the difference between commercial and residential lending. Is that a fair place to start?
Sure. So, I think for when you talk about small balance commercial, there's different variations of what people think is small. But my business is small. I mean, I start loans at $100,000. And then up to $2.5 million. And why I start there is because when you're thinking about someone purchasing a home, that range is much more reasonable than what people think about commercial lending, which is like millions, 50 million, 100 million, right? And I think the business itself, the difference is, I am helping small business owners either buy the property that they've been operating their businesses in, or I'm helping investors buy single-family homes or multifamilies for investment purposes, they're trying to build their wealth and grow that nest egg. So the main difference between us is a residential lending is someone really buying a home and purchasing a home for themselves and their family. My business is about someone either growing their business or investing in real estate.
Got it. And do you work direct with consumers or investors, or do you go through brokers, or how does that work?
Commercial Direct is direct to the consumer. So consumers come to me directly. A lot of times they are referred maybe by a realtor or a CPA or a lawyer. But a large part of my business is really digital. So people are Googling. They're doing their own research. They're trying to get informed. And they come to me through my website.
No, it's amazing how that works anymore. It used to be that you had to have an ad in the yellow pages or something like that. But truly, if you've got some information that people are looking for, they will find you. So that's great.
Definitely. I mean, I think it's shows like this also that really help people really understand what's out there and what's available.
Right. So you mentioned small balance, 100 to 2.5 million. Is there a definition for small balance, or is that basically what you've kind of defined it for your business?
It's what I've defined for my business. I think when I go out into the world and I talk to professionals in the commercial lending world, some people say small balance starts at 5 million, and there are specific people in this industry that they start at 5. There's others that start at 100 million. So it really is we've defined this as small because we feel that this is where our space and where our borrowers are needing financing.
Gotcha. And are you placing it with like a Fannie or Freddie product, or is this more stuff where you guys are holding the paper, or can you speak
We
to that?
are. So we don't do any agency. So when we think of our business, we think of we're lending to people that probably would not be eligible for an agency loan, or would not probably be eligible for a traditional bank loan.
Gotcha. And for the listeners, can you express some of the reasons why somebody might not qualify at a bank that would be a good option to work with
Well,
you?
there's one is credit always, so where your credit score is. The second thing would be the property type. What is it? We lend on, not your, multifamilies and, really pretty office space. We tend to lend the daycares, the restaurants, the bars, the, car repair shop. So these are property types that a lot of lenders really stay away from. On the agency side, you tend to need to have experience, and you are going to go through a full underwrite of all your personal and business tax returns. And so our program allows you, if you want to go the route of full documentation, we can, or if we can do an alternative way of looking at you and your business, we have those options as well.
Gotcha. And is there a length of time that you guys typically hold, or a note? Is this like a short-term loan, or do they mature sooner? Are
So
they a
these
balloon, or?
are, yeah, no, we have fixed products. Typically, our typical borrower right now will take our average loan size is about 420,000. They typically take a 30-year fixed mortgage, which is really unheard of in commercial. 30-year fixed mortgage is typically a very much a residential product. But we've decided that, for some of our small business owners, they're not looking to hop around to get a loan, every 2-3 years, every 6 months. They really want long-term financing. So our typical borrower is in our loan for 30 years. The loan to value is about 70%, and it has a 30-year amortization.
And for that, is there a kind of a rule of thumb as far as kind of a rate range compared to like what somebody might have heard on TV or something, or they expect to get advertised rate as opposed to what you're able to provide?
So typically, our starting rate is about 5.5. Our typical borrower is probably at a 6 and a half, depending on the credit score. And pricing for us, it's really driven by your FICO. And again, that's something different than commercial. Typically commercial loans, the credit score of the individual is not really taken into account when it comes to developing or providing terms. Our starting point is our credit score. So, depending on your credit score, then that'll drive your rate and your loan to value.
Gotcha. And you said loan to value, you go typically as much as 70%?
We go up to 80%, depending on your credit score.
Okay, gotcha.
I think the other
Go ahead.
piece that's different for us is, we also give cash out on commercial. Typically, people know about cash out when they think about their, taking out a line on their residential home equity line. It's rare that you can pull cash out of your commercial investment property or your own owner user property. And that's another feature that I think borrowers are seeking. They're seeking to reinvest in their own businesses and take out cash from the equity that they have on the property, or you have an investor that has equity on a property and wants to buy another one.
Gotcha. What about somebody that's purchasing a property that needs some repairs, or there's some sort of renovation budget that they have in conjunction with the acquisition price? Is that anything you're able to provide funding for?
We are looking for stabilized properties. So if there's really a large fixing of the property in order to reposition it and rent it, that's not the product that we're looking for. We're looking for something that's pretty much like 75% occupied, and that if it does need some repair, it's very cosmetic in nature and not, fully, I need a roof, we need to build, there's a complete build out. We consider that more of a fix and flip or a construction loan, and that's not our product.
Gotcha. You mentioned, or we were talking about kind of the qualifying. Are new investors? Are you able to work with a newer investor?
We are.
All right. And what about like a debt cover ratio? Do you underwrite to a certain percentage?
We do. Debt service minimum for us is 1.15, and our minimum credit score is 650.
All right. Well, that certainly seems like that opens up opportunities for, what some banks may decline. Do you find that like investors that have a large portfolio, I know, anymore borrowing money at a bank that has to follow all of the Dodd-Frank stuff, it gets kind of a narrow window of opportunity. I've talked to numerous investors, and it's whether they've got a number of loans or maybe they're self-employed or what have you. They may not qualify, even though their balance sheet is plenty strong and they make plenty of income. Is that somebody that would be a prospective borrower for you?
It would, and just like me, there are many other companies that really are focused on that bar. They're really looking at that experience and the fact that they're building that RAO schedule. So there's definitely opportunity for those, and for us in particular, definitely.
Got it. So stabilized property, qualified lender, or excuse me, qualified borrower, and longer terms. Is that kind of the sweet spot for you guys?
It is, and just as our average days to close is about 48 days. So when you think about a commercial loan and the process to get a loan closed, that's pretty much more in line with residential than it is with standard commercial.
No, that seems pretty aggressive there. I was going to ask you, talking about closing time. Oh shoot, I can't remember now. Can you, as far as you mentioned like the average loan amount, is there? Do you typically are most of your borrowers, are they owner occupied type things with like an actual business? You mentioned you're able to do that, or is it more? Do you find more of the investor that's buying for a non-owner occupied?
It's a 60-40 split for us. So 60% of what we see is investor and 40% is owner.
Gotcha. I'm trying to think if is there any, can you point to any other, like a highlight or a low light or a challenge you've seen that people, may not hear about in the normal course of getting a loan that you guys have been able to overcome?
Yeah, I think that, I think the story is really important, especially when you're talking about a small business owner. And I think that it's important for us. Small business owners, especially when you think about, a small business making it through our last recession, it's pretty incredible. And so I think a differentiating factor, there's a lot of data we can pull, we can look at a lot of different things, but a small business owner, someone that's looking for a $300,000 loan, their documentation could be messy, maybe not as organized, and maybe, a traditional tax return, even a bank statement might not tell you the story that this person can run their business and there's value in that real estate. So I think the differentiators for us is like, it's important for us to know, because ultimately what we want to figure out is this person's going to pay. And if this is their bread and butter, this is how they plan to retire, or this is the family owned business, it's important to understand those type of variables.
No, that makes complete sense. My dad was a banker all through his career, and I didn't understand what he did when I was a kid. It just didn't make sense to me. Put your money in the bank and and at the time you could get interest, but I know looking back that a lot of what he did was, somebody come over and my dad and another person would either be in the kitchen or they'd be on the driveway and talking, and a lot of that getting to know somebody and kind of understanding what their story was really important to making the relationship and essentially qualifying for the loan. So um, that makes sense. Um, do you guys have any kind of a territory restrictions?
We're a national lender. I think where, I would say where we're not lending is really rural. So like you're talking about the North Dakotas, the South Dakotas. I think that's where we stay away from. But generally in a major, there's 40, we lend in 46 states. So it's pretty much, we cover the map. And we have a varied amount of different property types that we lend on. So I think that that's of interest to borrowers, because a lot of times if it's not cookie cutter, it's not, something that someone can really understand easily. Typically it's just a no.
Got it. You mentioned, how you guys go on FICO, but then um, you'd mentioned kind of the property type and the occupancy type. Um, do you find that it is more of the non mainstream occupant is kind of your sweet spot on that?
Yes, definitely.
Okay, gotcha. And that was, you were talking about the auto shops and not so much multifamily, but anything that well, if your bank's not willing, that's a good opportunity for you.
Yeah, I mean,
Leslie,
very few people understand like warehouse or self-storage or light industrial. Like, and for a banker, it's like, what does that look like? What would the appraisal look like? And for us, that's really very much our sweet spot.
got it. And this is kind of more of a curiosity of mine. When you underwrite for the loan and that valuing a property, um, if it's a unique property or something, are you looking based on again, because it's stabilized and you can basically factor in what the current rents are, the current tenants paying? Is that kind of your starting point for an income analysis?
So we do order an appraisal for each of the properties, and typically the instruction to our appraiser when they go out is that they also look at comps locally. What other sales were there with a similar type of structure. Sometimes it's easier to get that comp, depending if you're in any of the boroughs in New York or in Miami, Florida. Pretty easy to get comps. Other places not so easy. But then that's the starting point for us. That value really will come with the comparison to other properties like it.
Gotcha. As an insurance guy, I got to ask you: is flood, properties in a flood zone or anything like that? Is that something that you guys shy away from? Or you, as long as there's flood insurance in place, would that be something you'd be able to do?
Yeah, we'd be able to do that. So we do run a flood cert, and then we'll let the borrower know that it is in a flood cert, and if they have flood insurance.
Gotcha. Hey, Leslie, before we started recording, I mentioned to you by day I'm an insurance broker. And as an insurance broker, we work with our clients to manage risk. And there's a couple of different strategies we look to. The first is we ask the question, can we avoid the risk? If that's not possible, then we ask, is there a way to minimize the risk? And if we can't avoid it or minimize it, then we look to see, is there a way we can transfer the risk? And that's essentially what an insurance policy is. And I like to ask my guests if they can take a look at, whether it be their business or the way they see, real estate investors, and if they can identify what they consider the biggest risk. And just to be clear, I'm not necessarily looking at or looking for an insurance related answer, because I do believe that risk is everywhere. But if you're willing, I'd like to ask you, Leslie Smith, what is the biggest risk?
I think, I'll speak about investing. I think what's really important when we see investors, one of the things that it's hard for us, and when we're trying to when I mentioned earlier about the story, is that they don't really know what their objective is as an investor. So if they don't have like an objective as okay, I want to own 12 properties and they need to look like this, and this is how I'm going to manage them. It's really difficult for us to see whether they're going to be successful in growing that real estate portfolio. You know, investing in real estate is it's not a sprint; it's a marathon. Like you really have to be methodical and thoughtful about what you're doing because you can get yourself in a lot of trouble, quickly. And that's your nest egg that you're building. So I think risk is that there's a lot of folks that say, oh, you know what, I don't really want to invest in stocks, and I think I need to buy real estate. They're not thoughtful about the plan, and then the plan. Then if you don't have a plan, then what kind of lender are you going to seek? And that could get you into some not so great loans. And we've seen that a lot. We've refinanced people where they thought they were getting they were buying this property and it was their investment, and then it's like a double-digit rate, and that's tough. And so that's really what we see as risky, because then you have a lot more default. You have a person that really thought they were making a smart investment and really protecting themselves long term, and it turned out to be a loss for them.
No, that's great, great input there. I think the having a plan and understanding the time it's going to take to execute the plan, that's uh, definitely more than just a click of a button and try and watch it go up, kind of thing. Which I think, unfortunately, in this digital age, there's a lot of people that get kind of swayed by recent success that people have had, and they get all excited and we're all
Yeah.
in kind of thing. And so definitely noteworthy there. I appreciate you sharing that. Leslie, where can the listeners go if they would like to learn more or connect with you?
The listeners can go to our website, commercialdirect.com. And you can either call us, you can chat with us, or you can apply online. There's a lot of information about commercial real estate if you're new to commercial real estate. So we put a lot of educational blogs and videos to help people kind of go at their own pace. It's up to them, how they want to interact with us.
That's great. Well, Leslie, I can't say thanks enough for taking the time. I've enjoyed talking with you, learned a lot, and hope we can do it again soon.
Thank you, Darren. Appreciate it.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.